Hello, everyone, and thank you. Welcome to our session for today, where we'll be talking about the most dynamic and opportunity rich areas of the country in regional Queensland. Across the state, regional centres are thriving. We're seeing strong population growth, record levels of infrastructure investment, and some of the tightest rental markets in the nation. From coastal lifestyle hubs to inland economic powerhouses, regional Queensland is delivering both affordability and outstanding returns for investors. Joining me today is someone who knows this market inside and out. Tony Saller, General Manager of Triple Zero Property Group. Tony brings a wealth of experience across the property and construction sector, having led major residential projects and worked closely with investors for many years. His on-the-ground perspective and deep understanding of local markets makes him the perfect guest to help us unpack this topic for today. And here he is right now, Tony Saller. Welcome to the show. How are you?
Great, Tim. How are you, mate?
I'm very good, mate. It's a little bit fresh down here today in sunny old Melbourne, but by the time we finish this webinar, who knows, it could be changed again.
Well, mate, I can't say the same for the sunny coast. It's beautiful up here, but big thank you for having me on today, and a big thank you to everybody that's tuned in, taking some time out of their day. It's greatly appreciated.
That's all right. All right, Tony. Well, we're going to kick things off. So if you'd like to share your screen, I know you've got a presentation for us today. And for anybody listening here today live, we'll be chatting for about 45 minutes. We'll allow about 15 minutes for questions at the end. If you do have questions throughout, feel free to put them into the Q&A panel. If they are pressing for the topic that we're discussing at the time, we'll go to them live. Otherwise, we'll leave them to the end, and we'll try to get to as many of your questions as possible. But let's start by setting the scene. Obviously, Tony, you've been working across Queensland for a long time now. What are you seeing in the regional markets that are really capturing investor attention?
I mean, a lot of the regional markets in Queensland, especially, have sort of had a delay on land release and have sort of sat static for quite some time. So we've been active in a lot of these markets previously, but we haven't revisited them for, as I said, quite some time. Especially if you look at something like Mackay, we probably haven't done anything up there for a good 10 years.
Mm.
And something that I'm seeing in the regional markets, and I mean, this is potentially how real estate in general, especially the investment side of things, should happen. It's almost as though the belts are swelling, and there's a real need for land releases in these regions, and that we just haven't seen. I mean, I was up in Mackay about 3 weeks ago with one of my colleagues. We were invited up there by a builder, and they wanted us to start sense checking some of the estates up there because they're very interested in pulling the trigger on some investment in there. And you drive through an estate and you'd see, the first couple of releases that were done in those estates are already 10 years old, and there's been nothing in between.
Yeah, wow.
So yeah, it's so very much a growth period for the regionals, and like any good investment group, we want to be there when it counts.
Yeah, that's it. Well, I mean, we always talk about markets being cyclical. So what you're talking about sort of plays into that.
100%, yeah. And we're seeing it up and down, but we're also seeing some really new areas emerge as well. And I'll speak to that a little bit. When I say new, they're obviously not new, but these are areas that have had little to no development for quite some time, and aren't just those major hubs.
Yeah. Okay. Very good. Let's dive in.
Fantastic. So I guess a little bit about us to begin with. So we've been around since 2008. We're based here on the Sunshine Coast in Queensland, lucky for us. We have built over 1,000 homes for our clients. Our core clients are, mostly your mum and dad investors, but we do have clients right through to your sophisticated investors. I'm working with a client at the moment who's on his 18th property. So we deal mainly residential. We are new construction only. And through that process, we're here to really mitigate any risk for our clients. It's a difficult market to navigate. And again, I'll speak a little bit later to where we see our place in the process and the market. But we're here to make the process really smooth for our clients and to ensure that we're making fantastic property selections for them. We've been active Australia-wide over our history, but we tend to focus sort of intensity on a few different areas. It's really important to us that we've got our sort of key partnerships with builders. We do from time to time use some aggregators where we've got long-standing relationships and we trust and know their product really well. But for us, it's based on great networks and great relationships that we, like I use the word trust, but where we can also leverage off for our clients.
Yeah.
Look, we've been doing, like I said, we've been doing this for 18 years. We're 99% repeat referral. It really is the sort of the dream position for a business like ours to be able to look after clients time and time again, but also look after their friends and families.
No, very good.
Uh, Obviously, today we're talking about everyone wants to know what the next hotspot is. Um, one of the groups that we use as well. Obviously, Tim and Terry from Hotspotting to help us identify. We use a lot of data and a lot of research to identify what they're going to be. The Queensland regional market has been ticking along really well now for I won't say a long time. It just feels as though there's been a lot of growth in a short period of time. And although things might have sort of appeared on the surface to have slowed down in some areas, there's a lot of activity and a lot of green shoots happening in others. And we're very much, we like to, well, Danny, our founder, his favorite saying is our favorite holding period is forever. So we're looking for those long-term, sustainable, high-performing options for our clients, and that drives our research and the work that we do. There's been a lot of, and I mean, I was talking to Tim just before, there's been a lot of talk about migration, internal migration. A lot of that migration is coming to Queensland. There was a huge exodus post-COVID, but beyond that, we're seeing, very separate to that now. I think it's driven a lot by lifestyle. It's driven a lot by affordability, and it's people's ability to work in different places. I don't know where the work from home concept is headed. It seemed to be the buzzword, and now it seems to be getting reeled back a little bit as well. But regional areas that are giving themselves an opportunity to host larger companies, and where we're seeing a lot of that infrastructure coming in, the opportunity there is increasing daily. So if you have a look at some of these columns there, on the top, we're looking at the June quarter 2025. On the bottom there, we're looking at the June quarter 2024. And whilst 24 was a massive year for internal migration from, those yellow columns are vacated capital cities, and those orange columns, or peach, we can argue about that later, are the regional areas. And then you've got your states from New South Wales through to Western Australia. You can see New South Wales, Queensland, and Victoria have seen this year, or Queensland's seen very little people leaving the capitals.
Yeah.
But New South Wales and Victoria, a lot of people leaving the capital cities and moving to regional. I mean, Tim, you've seen this a lot as well, mate.
Yeah, we've been I think the media headlines often reveal this trend that's happened since COVID, but we've been reporting on that for a long time before COVID. We call it the exodus to affordability. People choosing to sell down in the capital cities and move to that more, or maybe not even selling down, just buying in the regional areas and moving to the regional areas for that affordability and lifestyle play. And the markets that are really benefiting for this trend are the ones that are well connected through road and rail, so you can still get back to the capitals quite seamlessly, in a day.
Yeah, absolutely. We're also seeing in all these areas, as I mentioned before, there's been a bit of a pent-up demand, and this is driving that to a point where there just has to be more development. So, especially areas like the Sunshine Coast, we covered that on our last webinar. We have got at least a decade ahead of us where we won't be able to meet the demand with our housing supply, and we're seeing that replicated in a lot of different areas as well. So regional Queensland, so that's what we're going to talk about today. Sort of going to cover off from, we'll touch lightly again on the Sunshine Coast, but pretty much the Sunshine Coast right through to Townsville. Right through to Townsville and everything in between. And my apologies. And again, Tim already covered off on this, but I think a lot of us that held property prior to COVID really won through that through our equity and a big boost to our equity. We're seeing a lot of southern investors, especially your Sydney and your Melbourne market investors, look at Queensland for investment, which has been fantastic. But also It means that we've got a bit of a land drought up here, and the market is extremely tight. So when you add in a few government stimuluses, so we've just welcomed the 5% deposit scheme, and that covers purchases up to $1 million. So we're quickly catching up with other areas in regards to affordability, but it's still incredibly affordable in Queensland, and the regional hubs are really driving that. Lifestyle, I mean, I'm a New South Wales supporter, guys, but I love living in Queensland. It's absolutely fantastic, and we've seen a lot of people headed our direction for that. And then again, the Queensland government and the federal government have really opened up the coffers, and we're seeing some really amazing infrastructure development, and probably some of that's probably long overdue, but again, just adding to the drivers in our state, and why we know that it's an incredible opportunity now for investment up and down the coast.
And on that, Tony, in terms of the infrastructure, you've got all of this infrastructure investment that's going into regional Queensland. A lot of people probably think a lot of that's to do with the Olympic Games, but that's still to come. We've only just started to see some decisions made around a lot of the investment from the Olympic Games, so still plenty to come.
Absolutely, mate. And I mean, I was having this conversation just on the weekend because someone just said to me, why did Olympics drive prices up and that sort of thing? And I talked them through. I always use the term, sorry, thought my phone was off. That was terrible. I use the term legacy infrastructure. And I think for Queensland, especially, what we're seeing is a lot of government promises come to fruition which has been kickstarted by the fact that the Olympics are on their way. So, and these are transport based and facility based, but a lot of that legacy infrastructure is about, well and truly beyond that 2 weeks in 2032. And the whole state's going to benefit from those things for a very long time. And like you said, mate, there's still some more to come. So it's very exciting for Queenslanders.
I think the first thing people often think about when it comes to Olympic Games and Commonwealth Games is those sporting venues and everything, but there's just so much more investment that goes into getting people around the state, getting people. It's not just Brisbane's Olympic Games; it's Queensland's Olympic Games.
Correct, mate. Absolutely. A great example of that is the dual track that's going to be run from Beerwah to Batinia here on the Sunshine Coast. That's been in the wings for...
That's been a long time coming.
Oh, mate, a very long time. But then that's going to connect to the whole wave transport program all over the Sunshine Coast. So, again, the Olympics is a great stimulus, but that infrastructure is something that's well and truly bigger than that 2-week event.
Yeah.
Again, supply and demand. So all through regional Queensland, we are seeing a real need for housing. You can see the top 5 regional markets for internal migration the year to date. So the Sunny Coast is still leading the way. We've got New South Wales and Victoria. By our next webinar, Tim, I think I might be talking regional Victoria, mate. And then 2 more Queensland destinations in Toowoomba and Townsville. So the population boom, we're seeing really good yields through those areas, and we're seeing a really nice range of opportunity. But when you do go up to some of these regional areas, you can see why there's an absolute desire for new housing. We're talking a lot of, especially as workers tend to move into these areas, a lot of them do want slightly better product in their rental. Not your sort of 40-year-old double brick houses, no ducted, that sort of thing. So that keeps driving the economy up here as well. Tim, I might this is something that you guys have worked on, which we really like. I might get you to speak into this, please, mate.
Yeah, sure. So for us at Hotspotting, and it's funny, I'll pause for a moment and talk about the word hotspot for a while, because it's funny. I often asked Terry in the early years if he would if he had the choice to rename the business, or if he had the choice to start the business again, would he have used the word hotspotting? And he said, no, I don't think I would have. And where it actually stemmed from is he, many years ago when he was a journalist for the Courier Mail, his editor said to him, look, I want you to write about real estate, but I'm sick of it, everybody looking at real estate in the rearview mirror, talking about what's happened. I want you to tell us what's going to happen. And of course, that's where we started to look at all of these factors, looking at local economy, looking at infrastructure, looking at things like demographics and population. And of course, it was quite a popular column called Hotspotting, and then that's where the business began. But over the years, I think, for lack of a better word, hotspot has become, in a lot of people's mind, a location that might be quite rural and have a quick spurt of growth over a year or two, and then not much happens. And something we're really trying to help people understand is that for us to select the location that goes into one of our national top 10 or our top 5 reports, they have to pass through this empirical formula, which is all about long-term growth. Okay, so what we're looking for in order for a location to go into one of our reports, we need a really strong and diverse local economy. We're big believers that real estate markets are very local in nature, and they're very much driven by what that local economy is doing. We also need a minimum market size. And I look back to the media headlines for 2024, what did the Australian property market do in 2024? And whether you asked CoreLogic or Cotality as they're now known, or if you asked PropChack, they were either 5% or 6% was the national average for capital growth. However, when we started to cut out the minimum market size of 50 sales or more, and we said anything below that, let's get rid of, we found out there was about 4,500 markets out of the 33,000 that exist to begin with that actually had double-digit growth. So what does that mean? It means if you actually take out all of these tiny little towns that make up most of Australia's real estate market, but they're not very big markets, they're not really markets of substance, and certainly not markets we'd recommend you invest in, all of a sudden it tells a very different story. And these are the markets we want to be playing in. So instantly what we do, in order for a market to be to appear in our hotspotting reports, we need to see at least a minimum of 50 house sales per year. Doesn't sound like a lot, but that's the bare minimum. We also want a local government area population no smaller than sort of 15,000. And typically they're much bigger than that, but that's basically where our cutoff would be. We also want to see good existing infrastructure. So that is, good hospitals, good road and rail, good employment nodes and things already existing in the area. And this is one of the reasons we don't really sort of highlight many greenfield areas. I mean, there might be new development happening in these areas, but they must be established areas that have good infrastructure, but also evidence of new infrastructure delivery in the pipeline. And of course, Regional Queensland has that in spades. We also, in terms of rental market, like markets that have got sort of between that 4% and above rental yield, because what that's going to do is help you with your cash flow. The other thing that we look for is low vacancy rates, because low vacancy rates in a tight rental market is going to put upward pressure on rents. That's going to continue to improve your rental yield and cash flow in years to come. We look for markets that have got new job growth happening, so increasing employment opportunities, making a place more desirable to live. Obviously, if it's more desirable, puts upward pressure on rent. And then we also want short-term growth. And the way that we do that is by using our price predictor index methodology. What we do there is every quarter, we analyze every market in Australia. As I said, there's 15,000 suburbs and 33,000 markets to choose from in Australia. So as an investor, you've got plenty to choose from. But when we start to cut through that with cutting out the minimum market sizes and all these things, we get a much more manageable level. And what we tend to look for is rising markets. Rising sales activity shows that there is demand in an area. If we see rising sales activity, we often see price growth follow. And that's where we get that short-term uplift as well. So by using our hotspotting reports, we're always targeting long-term, but if they're in that top 10 at the moment, it means that you've got a lot of rising markets within the local government area, which means you can likely get short-term capital growth to get you back in the market again sooner. The affordability factor, we tend to look at markets that are sort of $500,000 to $800,000 median price points. This is where we tend to find the best rental yields, but also they're the markets that are actually the safest in terms of being a bit sheltered from economic downturns, a bit sheltered from those really big boom and bust markets, because this is where families can afford to live. It's where we get the highest turnover in terms of sales volumes, and it's because it's affordable. These are the markets across the last 5 years that have shown the strongest growth nationally. And then the last one, Tony, which everybody loves, is we'll never put any markets into a hot spotting report that are propped up by one or two major markets and not much else behind it. So mining areas, agriculture, tourism, these are the markets that we see as high risk. So we cut all of those markets out as well. What the types of markets we like to look for in terms of local industry, health sector, public sector, education. They're the types of markets that we see real substance, and they're a bit less volatile to things that are going on around them. So that's the empirical formula.
Yeah, fantastic, mate. Great one to follow. And fortunately, I am prepared to speak to a couple of those those
Yeah,
markets and why they're not single drivers.
yeah.
Um, but let's just sort of cover off briefly, I guess, on some of the challenges and what we see, and where I guess you want some expertise and advice in navigating different markets. And Tim, you just touched on one of those, which is economic dependence. So if you want to play, regional roulette in a mining town, and the core employer there and the core driver of the economy is a single setup, then that for us, there are plenty of people that have made good money playing that game,
Yeah.
but we want something that's sustainable, and as Tim mentioned, something that has multiple markets that's going to drive the economy for a long time. That longer term sustained capital growth is really important to us. We understand how important your rental market is, and we want to see a rental market that is, the word's not coming to me, but we're, locals, obviously, but we're interestingly in some of the regional areas as well. We're seeing that, your FIFO market, which could be considered a little bit transient, we're seeing a real
The
desire.
diversification you're looking for? Yeah.
100%. Yep.
Yeah.
Perfect. Thank you, mate. Obviously, we want to see strong infrastructure in that health and education space, and we want to see growth and foresight, and what's coming in the future. Clearly, there's some challenges, especially in North Queensland. We know all about some of the weather-based challenges that we have, but again, I mean, it's not a choice-based thing. You have to build to these extremes, and you have to make sure that.
Can we talk to that a bit, Tony? Because obviously it is something that people need to consider when looking at markets that do have some of these, climate events. And let's face it, it's happening more regularly than it was years ago. So how is it that, 000, what sort of due diligence do you do and help investors overcome some of these challenges?
Yeah, well, some of the simple ones we do straight away is we look at flood mapping. We understand. I mean, fortunately for us, our networks have a really good understanding of our expectations. So they're not trying to put something in front of us that is a bit of a lemon. But we will still do our due diligence, and when we're looking at areas that we are considering moving into, these are the things that are really important to us. We then also have to look at the cost of construction. So if you're in a cyclone prone area, your construction costs, dollar for dollar, are going to look a lot higher than what they may look like in Brisbane or another CBD where you don't have those challenges. So it's really important understanding. So we still want to make sure that we're not overcapitalizing, and really important to understand what those costs are, and that the overall project that you're looking at is still, from a cost perspective, you're paying the right amount for what you're getting, but also from a resilience and a sustainability standard, we want something that's going to still be there in 20 years' time without too much trouble, where you're not going to have to be dipping into your pocket all the time or paying through the teeth for your insurances. So none of our property will have that. And then infrastructure, again, we've seen in Queensland scenarios where there's been huge infrastructure projects, but they've left. Gladstone's a really great example, and I don't have too much time to go into that today, but that was a market that went absolutely crazy for a few years. That single entity left, and it left the market absolutely destroyed, and it's still recovering. There's some people talking about Gladstone. I'm still pretty gun shy, and we'll stay away for a little bit yet. But
it's interesting though. I think the real point with this is if you were to look at say Perth, many years ago, similar thing where it was very reliant on mining sector, and then all of a sudden, I remember Terry started putting Perth into our hotspotting reports around sort of 2018, and people would say, "Why would you be recommending Perth? It's a boom and bust area, and it's never grown." And the point is that we're in the science of identifying change at hotspotting. So we look at markets and say, well, what is actually changing? And the reason that Perth has had such sustainable growth over the last 5 years is, or even 6 or 7 years now, is actually because it's a much more sustainable and diverse economy. And that's what Gladstone's lacking a little bit. Right. So I think it's improving, but you can't look at history and say that it'll always be the same, because when things change, results will change too.
Agree, 100%, mate. Absolutely. So where to invest? So I'm going to take you through. We've got a couple of location spotlights that we'll talk to today, and then I wanted to share with you a couple of case studies as well. The Sunshine Coast. So just briefly, obviously, I spoke to this in depth on our last webinar. It continues to just surge. Danny and I, we sit down at the start of every year and we sort of talk about, where we're going to target and where we need to be. And we always ask ourselves the question, has the Sunshine Coast, and obviously geographically, it's a wonderful place for us to operate, but we won't be operating here if the price isn't right and if the outcomes aren't fantastic for our clients. So, but no, it continues to just power on.
Yeah. I mean, it's one of these markets that we've called it a second wind market. It obviously had some incredibly strong growth from sort of 2018 through 2023. Then it did soften a little bit in terms of that growth wasn't sustainable to continue hitting those double digit year after year. So we monitored that and noticed that it started to slow down. And then similar time to when you and I caught up at our webinar earlier this year, we put it back to the top of the list and said we believe that the Sunshine Coast is probably the most exciting market in the country at the time. And I went and bought a property there myself off the back of that. So I'm a big believer in the Sunshine Coast, and we would agree with you. It is one of those markets that continues to outperform because it is still relatively affordable in terms of the capital city versus regional market. But you're getting something rather modern for your money up there if you want it. I know you guys are specializing in new build. The sort of value for money you can get in this market for new build compared to the capital cities is chalk and cheese. But the infrastructure going into this market, the population growth, it's got a very, very exciting future ahead of it.
Yeah, 100%, mate. And we're seeing, the median house price here on the Sunshine Coast is $1,060,000. So as you alluded to, it's still very affordable by a lot of people's standards.
But it's a market where on that $1,060,000 you can get nearly the $1,000 a week rent. Our place sort of achieved near to that, and that's pretty rare. It's not often you can spend $1 million in Australia and get $1,000 a week rent, and we almost at that. So
yeah, no, spot on. So let's talk a little bit about Townsville. Now, I think I mentioned it earlier. A lot of people believe that Townsville has sort of peaked, and I completely understand that. I think one thing that you speak to this a lot, Tim. Location being 80% and the project being 20%, and I mentioned earlier as well that you can get a lot of information. There's a lot of information at your fingertips now in regards to location, etc. We at 000, we work with about 50 clients a year, so we only need to cherry pick 50 great projects out of a national market to present to our clients. So whilst we agree 100% that Townsville has really seen some extraordinary growth over the last 18 months to 2 years, we also know that there's still some fantastic opportunities to be found if you know where to look and if you're working with the right people on the ground. The economy there is very diverse, and interestingly, across traditionally your Townsvilles, your Mackays, these are heavy mining and agricultural based economies. But over the last decade, we've seen a lot of diversity in those economies, and we're seeing, again, I always find it quite interesting when you mention in the same breath that mining and renewables, are both huge drivers in these areas now.
I think when people think about mining areas, instantly we have the negative connotation, but they can be very supportive of areas if there's other diverse economy or diverse industry within the economy as well. So you don't look at an area that's got mining and say that's a bad thing. It's a very, very good thing as long as there's other things to support it.
Oh, 100%, mate. Yeah. And so we went up to Townsville earlier this year again, made sure, we were boots on the ground and having a look at the different estates there and getting a real feel for the market and what was happening. Um, Townsville's got a very strong military presence,
Mhm.
and that, yeah, we've worked with DHA Investment. So, for anyone who doesn't know, Defence Housing Australia, sorry,
Mhm.
we've looked at investment in the past, and we have worked a little bit in that space, and it's a fantastic opportunity if you want something that's ironclad and extremely low risk. More than happy to talk to people, outside of this webinar presentation about DHA, but we have been seeing some really great opportunity in that space up in Townsville.
Yeah.
If we're going to look at that as an option, it still has to have that real strong investment outcome, so the capital growth, etc., as well. So just because you're close
Yeah.
to military doesn't mean it works. The port there, so it's the biggest Queensland port for zinc, lead, and copper, and there's some great infrastructure development going in there. As I mentioned before, agriculture, I mean, sugarcane all through Queensland, but very strong from an agriculture perspective. Higher education as well, so it's really
Mm.
established itself as a significant hub in in that central North Queensland area. I mean, you could argue the point that Cairns might come into the scope over the next 12 to 24 months, but Townsville has managed to lock down a national sporting team as well. So,
Mm.
when you talk diversity, and I mean, it's just a really nice place. It's hot, um, but it's actually a really beautiful place. The Esplanades, the water and the developments that are happening up there are really conducive to a fantastic lifestyle. I mentioned Stockland have got a great master planned estate up there, and you know, taking advantage, I guess, now of some of those coastal areas, which they haven't done well, in my opinion,
Mm.
for quite some time. So we're really liking what we're seeing up there, and again, we're able to cherry pick some fantastic options for our clients. So we're still quite active up there.
I think the key with this is it's still relatively affordable as well, Tony.
Oh, it's incredibly affordable. Like we're seeing, it does feel a price point that is almost impossible to achieve in Southeast Queensland at this
Mm.
point. Um, and then you've still got, we sort of talk about topping out, I guess, in a market, but you've got the Copper String 1.0 project and the Lansdowne Eco Industrial project as well. And these projects they're connecting Queensland, but they're going to be driven over a long period of time. So no concerns about growth, but
Mhm.
as I keep mentioning, your selection process has got to be on point to ensure that in a market that is peaking, you're still getting great options.
Mm.
Mackay, like I said, it's another region that has established itself beyond just its mining and agriculture um, side of things. Education, again, renewables. So you got the $2.9 billion Capricornia Energy Hub,
Mhm.
which is groundbreaking, and again another long-term project. We're looking at your wind, your solar, your hydro. So much happening in that space up there. It's another education hub as well. So that's in its top 5 economic drivers. And
Mm.
you've got the $250 million hospital expansion. As I said, we were up there just a few weeks ago and visiting the estates. This nice blend of, I guess, really close to the Mackay CBD. There's suburbia, and then you've got some beautiful coastal areas as well. And we're talking, when I say coastal, we're talking estates that run literally along the coastline, along the beach. And I'll touch on that a little bit as well in the Wide Bay Burnett region. But we're doing properties at incredible price points that are less than 500 meters from the beach.
Mm.
Now, not everyone wants to swim at the beach in Mackay, but living there is absolutely beautiful. So, and then the accessibility to the city, and for a lot of those FIFO workers that might be a week on, week off out in the mines, they really want this lifestyle when they do come back and when they are living in town. So all of these drivers are seeing huge growth through that area. And I think a long awaited release of land has been really welcomed.
It's quite a substantial population now as well. It's 120 odd thousand people or something now, isn't it?
Yeah, it's here, and
Well,
I
that's
mean,
bigger than Darwin.
absolutely, another hotspot, mate.
Yeah, well, I mean, it's one of those things that we in the business of identifying change, and Darwin's certainly one that we as unpopular as the opinion was when we started saying it, we said 9 months ago we think Darwin's going to be the market leader this year, and at the end of 2024, it was sitting at 0% growth over the last 12 months. You fast forward to the end of August, it's already in double digits, 10.4 or something like that. So. And this is a market that it traditionally has been a poor performer. But when you notice change and you see things like big investment going into the areas like Mackay, and it's the local output, the GRP for Mackay is something like $14 billion a year. That's huge.
Yeah, it's wild. Yeah.
Mm.
Yeppoon, look, I won't spend too much time on Yeppoon. Again, I think this one you'll probably get an even split on people's thoughts and beliefs. The Rockhampton market, we feel like the Rockhampton market has peaked,
Mhm.
and it's done really well, but we're sort of not so much interested in that city area.
Yeah.
But Yeppoon's interesting, and this is where some of that on the ground information is, I think, really relevant. There's been for a while now a lot of talk about the Yeppoon population increasing and exploding. When you talk to any agent on the ground up there, they're desperate
Mm.
for both sales and rentals, and it's largely untouched, and it is a beautiful patch of coastline.
Yeah.
And again, a lot of people living in Rockhampton and surrounding areas would love to migrate out to Yeppoon. There's just no housing there. So we're going to tread lightly, but we are looking very closely at the opportunities that present. We're starting to see a couple of nice duplex options come through, and I guess scenarios where you potentially hedging your bets a little bit,
Mm.
but we're looking very closely and hoping to secure some great options in there shortly.
Out of curiosity, Tony, what would a house and land package, for instance, be in the Yeppoon area? Where we got a 6 in front of it or a 7? What are we looking at?
You'll see. So if you're looking at a single contract split duplex, for example, you'll have a 6 in front of it, no problem at all, and that'll be like a 422 on both sides.
Mm.
Um, and then if you're looking at a quality 422, and got to remind our southern staters that these are going to be 600 to 700 square meter blocks. So
Yeah.
these are nice large lots. You're going to be playing in the high sevens,
Mm.
and touching on 8. And again, these are full
But
turnkey
you're looking at
sites.
rental yields around 5% there.
Easy,
Mm. Yeah.
easy, because there's nothing there.
No, that's right.
Um, if you ever want to play the game, jump onto realestate.com and see what beach shacks are up uh,
Mm.
for rental, and that's what's driving this. So that's why there is confidence for us.
Mm.
But again, a lot of due diligence will go into any selections that we make.
Yeah.
Uh, and I thought I'd just share with you a couple of recent results that we've had for our clients. So Elliott Heads, which is a few kilometres south of Bargara, and that sits just off Bundaberg. So the whole Wide Bay Burnett boom has been driven by, I guess, again, for a long period of time now, there's been strong internal migration. Less people have been leaving the region as well. So there's been a lot of retention, I guess, especially in that younger demographic where traditionally people have moved away, but now there's better education opportunities and facilities, and better work opportunities as well, and career options.
Mm.
But what we've seen is, again, a long time coming. The esplanade between Bargara and Elliott Heads was relatively populated, but everything behind it, and I'm talking 200 meters behind it, was farmland.
Mm.
So we've seen some smaller and larger estates develop through that corridor, and with it, we're seeing an influx of some high quality options. And again, those price points. I mean, these started. You could easily secure a 600 square meter block with a 190 422, 190 square meter 422 within a kilometre of the beach,
Mm.
and it would have a low. You'd be in the low to mid sixes. That's now sort of moved up to the high sevens. But we're still seeing incredible growth and fantastic opportunity through there. This is a property that I actually secured for one of my clients, who's a repeat client of ours, earlier this year. I have also seen and sold single contract half duplexes for 750K in the same area. So we're talking uplift on this particular project of circa 360, and that's, I think, based on the fact that this will be released to market mid next year. Although I do feel that the client's going to hold on to it, but once those titles are separated, you're looking at about 360K conservative uplift on this particular project.
Yeah, it's amazing.
And being lifestyle based, these aren't small homes and small lots. This one's actually it's a corner block. So your entry to each property is on a different street, which we love. That's nice to have. You don't always get that, but it's a nice to have. But when you split the title, you're still over 400 square meters each side. You've still got a nice wide opening down the side to fit the boat or the caravan or the jet ski. And we're seeing extremely strong rental yields. I actually, I make a point of not over inflating any rental yields. I think that's a bit low, that 680 to 700. I think once completed, these will easily achieve 750 and probably beyond. But there is a bit of product coming to market as well at the same time, so we're just careful around that.
Yeah, the type of tenant you could sort of attract there as well. Am I right in saying that, given that you've got a short commute to Rockhampton, and there's such a high fly in, fly out cohort there's probably a lot of that mining money that's coming into these newer areas and wanting new housing stock. Would that be right in terms of who you'd be attracting as a tenant?
Yeah, definitely, mate. Just on that one, that's obviously Bundaberg, but it's the same for Yeppoon and Rocky.
Oh, sorry, is that previous one? Sorry, I thought we're still on Yeppoon. Sorry, I missed.
Yeah, no, that was Elliot Head. So that's just
right.
Yeah, but mate, it's exactly the same. Absolutely. That market, especially that market that's coming to town for the first time, they want for their 7 days off or their 5 days off, whatever their rotation is, they want to be in areas where they can, really enjoy the lifestyle. The commute, and even those that commute. So we're sort of talking, now sort of going back to Mackay to a degree as well. They might base themselves in those areas. They might work, 5-6 hour drive away, but when they come back, they really want to enjoy the lifestyle, and that. Especially if you look at that demographic, that younger demographic, say 20 to 30, who haven't necessarily settled down in any way, and that are long-term renters and have a lot of disposable income, they're happy to pay a bit more rent to have that accessibility and those amenities.
Yeah,
Definitely
absolutely.
want somewhere to park the jet ski and
all the toys. The reason they can't afford the house to buy.
Yeah, we've got a couple of those. I've worked with a couple of those, and yeah, they're actually quite good value. But yeah, they do tend to have a lot of disposable income, but not a lot of income, not a lot of cash lying around. So
yeah, that's right.
You do the math. I mean, I feel like the last 12 months I've heard SMSF a million times, and it's probably my algorithm. But if you've got any investment in your algorithm, you're going to see a lot of it coming up, and we're seeing a lot of inquiry in that space. I mean, I've just completed an SMSF project for myself, but sort of leaning back into the Fraser Coast as well, so your Harvey Bay and surrounds. We're able to secure this project for our client. It is a half duplex. As you can see, that is an actual photo of the backyard. So you're out onto the lake there, which is beautiful. This is Barham Heads, which is a little bit further north of Harvey Bay. Exceptional price point at 655K. We know that's already seen, in the region of $80,000 in uplift at handover. Rental yield is strong. It was rented. We had a contract on this because we introduced this to the client about 3 months before completion. There was already a lease on it, and that was at so that rental yield was at 5%. Nice big property, so it's still 4-bed, 2-bath, good sized lot, and as I said, that little vista there is beautiful. And we're seeing in that Fraser Coast market. Sorry, I can't remember if I mentioned it, but you've got the $450 million Sheraton project.
Yeah.
We're seeing these huge drivers of job growth and the economy, we're seeing less people again leaving. It used to be, I mean, Harvey Bay was always the newlyweds and the newlyweds nearly dead, as they called it.
Yeah.
But what I saw, and I worked for quite some time in that area when I was with another business, and you just see an exodus of young people. You know, I was in the hiring market and always looking for the right people, but you just kept seeing people leave for better opportunities, and that slowed down a lot, which is
Mm.
fantastic. Then you've got the Torbanley Rail Factory, which is going to deliver 65 six-car trains to Queensland, part of the Greater Queensland train. I can't remember the exact name, but train manufacturing project.
Yeah.
So we're seeing a beautiful, what would have been a lot of beach shacks and a beautiful, sleepy little coastal town really start to come into its own. And fortunately for our clients, providing great options. So I guess, Tim, unless you had anything else you wanted to add, I can talk a little bit to how we can help.
Yeah, go for it. No, that's fine.
Look, I think I covered off on it at the start of the call, start of the webinar, sorry. We're Sunny Coast locals. I think the key things for people that work with us is knowing that you are one of only a few clients that we work with every year. So we cap it at about that 50 mark. We leverage off our relationships and long-term networking and relationships to get the best outcomes for our clients. We always advocate for you. We only work with cash strong, high quality builders. And if we do use an aggregator, it's someone that we've got a long standing relationship with, and it'll be builders that we've already vetted and used and know that we can trust. You've heard me talk about the fact that we went up to Townsville, the fact that we visited Mackay a few weeks ago, and on a regular basis, we're out looking at the next best opportunities. A lot of that driven from information that we get from people like Tim and Terry. But rather than just selling off a stock list, we will go out and ensure that our selections meet our criteria. And today we'll also, for anybody who wants to secure our collateral, we've got a great little regional Queensland resource there that we've put together with Terry Ryder and Tim. So you can just scan that QR code and you'll be able to grab your free copy and download that. I think it's about 141 pages, so a bit of light reading for the weekend. But also, you'll notice on our next slide, it's the same QR code. So if you scroll just a little bit further, if you did want to have a chat with me at any time, you can book in a call with me. It's absolutely obligation free. There's no cost to have that conversation. Would love to have a chat. Would love to answer any questions that we don't get to or cover off on today, and share a little bit more about how we do things and how we can help you on your investment journey.
Terrific. Thank you very much for your presentation, Tony. I'll get you to leave that on screen for a minute or two, but for anybody who may not be able to scan that QR code, if you're watching on your phone, there's also a link in the chat to go and download a copy of that report or book a session with Tony. We've got about 12 minutes available for questions, Tony. There are a few in there, but by all means, if anybody has any other burning questions while you're sitting at home, please feel free to throw them into the chat and we'll try to get through as many as we can. We'll start with Ben's one. Ben says, Bundaberg is evolving in terms of public and private investment. How do you see the new public hospital impacting the local real estate market? Do you want to tackle that one first, Tony?
Yeah, absolutely. We're already seeing the impact. So where it's actually located, it's near the airport, and I can never say the suburb name correctly. It's Tharbaban or Thabeban.
I'm glad you had a go at it. I wouldn't have had it.
And we've seen a couple of nice, sort of more boutique estates pop up. And to give you an indication, it was called it's going to drive me nuts, but it's I can't remember the name of it, but there were about 30. There was a release of about 36 lots in this estate. It's over near the river, so it's on, slightly on the other side of town. But we were starting to see a couple of really nice options that we were interested coming through. And then all of a sudden, a larger investment group has swept in and taken up the entire release.
Mm-hmm.
So we're seeing really aggressive plays on real estate in that area. The first stage, the hospital's already under construction, and keep in your periphery the fact that the Bundaberg port project is also well and truly underway. It opens to the public late. Well, it's slated to open to the public late 2026, and completion, I believe, is sorry, it might be 2027, and then completion 2029. So we're going to see job growth throughout that period. And again, if you've ever been to Bundaberg, it's prime real estate for both development but also knockdown rebuild. There's a lot of old housing. Yeah. And
this is the thing. We often, Terry and I often joke about it because Terry's very much into the data and where the data is pointing us. And then quite often I see that data and then I go and see the real estate and I go, okay, the data might look good, but I don't like the look of the real estate. And that's why in some markets I prefer to do new build than I do established. And that's certainly a market where I think there's good opportunity for new build.
There absolutely is. And we're going to see our projects rent really easily.
Yeah.
We're going to see great yields because they
can't get it anywhere else.
They're unique in the market. Yeah,
it's a market full of Queenslanders, and I mean the home, not the people.
100%. And owner occupier, love a good Queenslander to rent. Yeah. Okay.
Well, I've got another question here, which is from Jaydeep Singh. I'm going to allow you to talk now, Jaydeep. So your microphone will open up. We look forward to hearing your question. Are you there, Jay?
Oh, thanks, team. Yes. Look, just wanted to see what your thoughts are around these markets. Obviously, all of them are good. Mackay, Rockhampton, Townsville. But with regards to climate change and flooding and all of those things as well, if you were to put numbers to that in terms of priority as an overall balanced scorecard, what would that be? And thanks in advance, please.
Tony, you're the local. Do you want to tackle that one first?
Yeah, look, I think when we, I'll use Southside Gympie as an example. So Gympie is quite well known for its flooding, and what we've seen over the last decade is a lot of infrastructure and mitigation, to help. It's going to happen again, but there's a lot of mitigation happening throughout that area. But also when we make our selections, we tend to, if we know we're in a flood prone area, we will look to go into areas that aren't necessarily going to be impacted by that. I have to be brutally honest, I don't put longer term climate change into my trajectory. I think at the moment, and maybe Tim, you might have stronger thoughts on this. We're looking at obviously, probably more now data and that micro data in regards to climate and that sort of thing. But then we're also looking at the quality of what we do and where it's specifically located. What are your thoughts, Tim?
Look, it's a good question. I think for me, I probably do have stronger thoughts on it than that. And the main reason is there's a lot of research now, and especially published very recently, some pretty scary articles written, and some of it saying that 2% of Australian real estate will be uninsurable within 2 years. And that's pretty scary. And obviously that is in a lot of these pockets in the northern parts of Queensland, which are obviously seeing a lot more of this. So what does that mean as an investor, and what does it mean? Do you mean, do I completely avoid the area? Well, not necessarily. There's a lot of fantastic tools out there now to actually look at what parts of these areas flood and what don't. A quick tip that you can use, and go and use St. George calculator, St. George's, sorry, not calculator, St. George Insurance, and get a quote in 2 minutes on any address in Australia, and it will tell you what it's going to cost you to insure right now. And it's doing a lot more due diligence than anybody else in the country. It's underwritten by Allianz, and I can assure you they don't want to be paying out on policies. So they do a lot of research before they're giving you these quotes. And the reason I do that as a due diligence piece is it tells me whether or not this is high risk or not. That's one step. The second part is, and this plays to your point, Tony, is that when you do new build, they don't let you build in a flood-prone area. Like if you go and have a look at and you'll probably be able to call these dates out a little bit better than I will, Tony, but we've had 2 significant Brisbane floods in the last sort of 30 years. The first one was at 90s.
I've got the worst memory ever.
I can't remember, 92 or something like that from memory, or maybe a little bit later. But that first one, which was devastating. You go and you have a look at that and you see all of the areas that flooded. And then you go back and you can use for free the Queensland Flood Map Checker. It's a great website. You go and have a look at that and have a look at the next flood. And then you start, and I'm familiar with so many of these areas where new build was built after those dates. And of course, they put in place these new laws around where you could and couldn't build. And of course, they don't want you building on these flood prone areas because, of course, it's going to happen again. So when you start to build with new build in these areas, there's great opportunity for you to still get into a market which has got fantastic upside with also delimiting your risk by doing the right due diligence. So not every part of Townsville is going to get hit by a tornado or have flooding in Mackay and things like that. It's specific to low areas in terms of your flood risks and things. So you just need to do your due diligence. And that's the key. But as I said, if you have got any sort of adverse appetite to risk, then don't be buying in areas like that. But when you avoid buying in markets like that, you're also giving up some upside and some opportunities.
Thank you.
Thanks, Jake. All right, we're going to move on to the next question, which is one on Cairns. Cairns is transitioning from a tourism hub to a diversified growth centre. Do you see this shift impacting long-term property investment opportunities? That was from Sally.
Yeah, Sally, absolutely. It's on our radar, and we're starting to see green shoots of that, most definitely. I haven't been up there for a couple of years now, but I remember the last time I was there thinking, wow, this place has got a lot of opportunity.
Yeah.
There's a lot of great land up there, and I'm always on the hunt for land, but I wouldn't be surprised. I think I mentioned it earlier. I wouldn't be surprised if it comes fully into the periphery in the next 18 months or so. Again, we just keep an eye on these things, and as soon as we start to see those signs, those green shoots, we'll be up there and having a look around for sure.
Yeah, it's certainly becoming a lot more diverse in terms of its industry and economy there, and that it wasn't a place that would have made it to our list in the past, but it's certainly starting to get closer to that. And then we've got another one here from Brian, which is about Toowoomba. They're saying Toowoomba's been identified as a growth centre because of the Inland Rail project. And it says, is it expected to influence the local property market? And the answer to that, absolutely it is. I still believe, whilst, Townsville's had its day in the sun, and people might say that it's reaching a peak, and we can certainly see some of the sales volume starting to slow down in Townsville. But equally, Toowoomba, people have been saying that for years, and there's a certain business out there that produces a property clock. I won't name them, but they've had Toowoomba at the peak of market for 14 months in a row now. Right. And the reason that we've been in disagreement with that for a long time is because it's still relatively affordable. And the reason that it's seen all of this growth is because of the infrastructure that's coming to the area. And that infrastructure is still to come. The Inland Rail project is still to come. Boeing's injection of the aerospace out at Wellcamp, the brand new hospitals under construction. It's got so much going for it. Now, it is a market that I actually believe, long-term wise, it's a very, very good market. But even in the short term, you just got to change your product mix. So I believe that that's a market you can buy really affordable units there and see stronger capital growth in that market than you might in houses, because houses have reached a point where the yield's not quite making as much sense as it was a year or two ago. But Toowoomba is absolutely a market that I still believe has got some good days ahead of it. What would you say, Tony?
Oh, mate, 100% agree. And again, it comes back to your property selection.
Yeah.
You made a great point there around your matrix. Potentially it's a better time to be looking at units. I reckon I could still find you one good one, house and land. But
yeah,
that's the thing.
Yeah, do you know, to that point, Tony, it's house and land in if you look at Toowoomba and if you are buying properties in that, whether it's established or new, it's it's obviously a competitive market and it's certainly grown, but you could go and do the ripple effect into areas like what's the one that's it's escaped me now? It's just north of there. It's a very modern area in Toowoomba. The name escapes me now, but if you go and have a look, it's 15 minutes away. There's another little supermarket and shopping complex there. It's 15 minutes from the town centre, but its median price is over $1 million. Yeah. Right, but you can still build a brand new house and land package there for 700,000, 750, and you'll get $700 a week rent there. So it is a market that you can still do very, very well in new build.
Yeah, agree, 100%.
All right. Well, look, Tony, that's brought us up to the 2 o'clock mark. I've really enjoyed your presentation today. It was lovely to have a chat again. I just reinforce that if anybody would like to catch up with your team or download a free copy of that report, you can do so using the QR code or the link in the chat. We will be sending out a replay to everybody who registered, and we'll be sure to put the links in there as well. Tony, thank you so much for your time again, and we look forward to doing it again soon.
Tim, thanks for having me, mate. And again, to everybody that joined the call today, really appreciate your time.